I see the cat recovered from its weird drop after earnings. Do you see it tracking with the market today and in general? Thanks. I mean, I'm not playing cat right now. It's really not in a very good range to trade it. I mean, you might have some success, but it's risky. I don't think Crocs have been around for 2 decades. Why are people here talking about Crocs though? Was it Piggleswick? No, they've just been doing really well for the last couple of years. Crocs company is 21 years old. Huh. Time flies. I mean, based on SPX's like skew over the next 30 days, most of the sold call positions are between like 41.65 and 42.25. The biggest positions right now, like a month out, are 41.70 through 41.85 and 42.05 through 42.25. Although that whole range has like a lot of sold call positions. What the heck was that on the SPX 1 minute candle on TradingView? Well, it looks like an order filled at 41.27.17. I'd be okay with that. Yes, please. You mentioned Tesla has its ETF FTDs next week. I'm underwater on my puts. Expires June 16th. What strike do you have that you're underwater? Tesla's down like 20% since the end of March. How do these things happen? I had some 310p and 300p for QQQ. 630, just curious your thoughts. PT of 290 by end of May is my thought. PT 290 by end of May? That's a big dump in tech you're looking for. I guess you have time. It could be not that bad. 155 strike. I bought a couple days ago. Oh, okay. I mean, I probably would have cut them and waited to reposition, but since you've chosen not to, I don't know. Can you average down? Upside resistance at like 168, 176. There's an upside gap and a downside gap. I don't know which one I'll fill first. They're both pretty big. Tesla fell pretty hard over the last month, though, so its ETF FTDs might be a little more substantial. But I would look towards the end of that period to average down or pull back and wait till that period to reposition. Any idea what would show up on TradingView but not Fidelity or something else? I don't know. TradingView's data is pretty incomplete sometimes. I would say that some exchange printed that order, but it's probably not one that WeBull or Fidelity track because we're not seeing it on those. 400p May 19 on Lily regarded. I mean the May puts on Lily are risky. Lily can stay in its upper range for a little while before dropping, but the closer to the money you can get them, the better they are. What are your thoughts on May 5th SPX puts? Too soon? I mean, you're just betting on the Fed meeting making everything go south, or Apple earnings being really bad. It's not a lot of time. I mean, I'm sure at some point I'll own May 5th SPX puts, but even my like overnight straddles are farther dated than that right now. And a 0.25 increase is still an increase. It's not bullish. If I start to see, dump into close. If I start to see money flowing back into equities and bullish things, then I will assume that the market is turning around. Right now, everyone's money is going into money market accounts, right? While the Fed continues to quantitatively tighten. So, no, none of the money is there, right? That's the biggest issue with the bull market case. There's a lot of money in derivatives. There's a lot of pump, but it's not substantial. I think the longer term bull case is we continue to chop somewhere between like 4,200 and 3,600 on SPX for the next few months until inflation gets under control and the Fed starts to pull back rates. At which point we'll probably already be in a deflationary environment and we'll probably get a correction off of that, but the recovery from that would probably be fine. I think we're still about, even in the best case scenarios, I think we're still about a year out from any like actual bull market. Does SLD have the same effect in the bull market? It did, yeah. The effect of SLD is due to the effect of over leveraging. It's not really about whether we're in a bull or a bear market. This preemptive bull market buying. How likely do you think we'll see SPX 4000 before May 19? Why does everyone do this? Stop asking me odds. We have the Fed meeting in between now and then, and I have no idea what the outcome of that's going to be. The market's bouncing around in like a 200 BPS range for the last 4 weeks. Bit of an idiotic question. Is there any probability of the Fed hiking next week, but providing further liquidity, citing bank issues, or potential FDIC takeover of FRC just like SVB? I mean, FRC already made use of the federal backstop, right? And I don't think the Fed's going to come out with any more liquidity for the banks. FDIC taking over FRC would not be bullish in any way. Based on your bull thesis, our next few months of puts could get toasted. How? We'd still drop from the highs. We're not just going to stay at 4,200. Yeah, but I don't care about your positions. That's the thing. Maybe that's something you guys need to understand. Maybe this hasn't been made clear. I don't give a what you buy. I don't care when you buy it, how you buy it, or how you manage it. You have the analysis. Do with it what you will. The market's volatile right now. Go with the flow or fight back against it. It's up to you. He's just saying that, guys. He cares. He really cares deep down. I really don't. If you're overextended, fix the problem with your portfolio. Don't ask me. Looking at the 6-month chart, SPX is looking pretty bullish. What are you just like trying to find the most bullish chart? Does it look bullish on the 1 year? How do I ban you? 1 year chart looks like SPX has bottomed and is curling up. Okay. SPX breaking down here? A little bit. I think futures just got rejected again. Yeah, 41.85. Although the 41.80 rejection just led into it climbing back up again. So, I mean, unless this gets momentum, it's meaningless. Are you trying to do TA on the 6 and 12-month candles for the S&P 500? Yeah, that's what's happening right now. Look at the yesterday and today chart. SPX is looking pretty bullish. You mean, what about the 2 days before that, Tim? I mean, I love how realistic Gherk is. All these people clawing onto copium and hoping Gherks text them in at night need to go to other garbage stock YouTubers. We're lucky to have someone who's real. I mean, I have no ability to manage anybody's position. So if you're underwater and you feel like you f***ed up, you probably have. Fix it. Don't cling on to some hope that it's going to bail you out in the future. The macroeconomic data looks bad. We're running into a Fed meeting that could definitely shift the course of the market, riding off of the back of what is just yet another 2-day fucking pump, built entirely on futures buying and zero DTE calls. Have they lasted in the past? Am I the only person here capable of looking at a fucking chart? I mean, I feel like there's some things that I don't need to be asked. I'm not saying that there's dumb questions. There aren't, but like, at least do some due diligence up front, right? Before trying to look to me to get hopium for your position. I mean, the market started pumping, so I started buying calls yesterday. I bought calls all day today. I bought calls all day yesterday. You capture all the upside that you can, and then you figure out what to do after the fact, right? See, Yaga, that's the thing, is like, that's your decision, right? Like, you've got to execute that decision. You can't just, be like, what if maybe, and no. Sometimes it's very important that you just take the loss, reposition, and move on. Clinging to the hope of what if will destroy your portfolio. This is one of the biggest problems with social media and investing. They don't work well together because people in social environments tend to be attracted to the group's line of thinking. And in investing, and especially trading, the majority is usually wrong. That's why, like, if there was ever a squeeze on GME, I was going to shut down the Discord, because the only thing you would have gotten from the Discord is incorrect sentiment, right? Like, you're just going to be influenced by what other people think, and other people are usually idiots. It's better to have your own plan and execute that plan without any additional outside input. But I mean, every one of these pumps, everyone's reacted the same way, right? It's been the exact same thing every time. I mean, we can just like go back on the SPX chart and look at all of them. And there've been so many, right? You know, there was Fab, where everyone was freaking out because it hadn't dropped by the first day of SLD. And then this was the first bull market, and then this was the next bull market, and then this was a bull market, and this is a bull market, and this is a bull market, and this was a bull market. This was a bull market. Every single time, over and over and over and over again. At what point do you stop going, okay, there's no bullishness here? Like, we're not even at the same high we were at 3 weeks ago, and we've already lost the bull side momentum. The problem is the down part, it happens fast, and you have to take profits. It's still an index. And it's still an index of the 500, like, arguably best companies in the world, right? So its natural movement is always up. There's always, people are always going to be depositing their 401ks every week, regardless of what happens. 5 to 10% of all their paychecks are going to get pumped right in here. So, when we get a drop, like, we got through OPEX in the SLD period, right? This was our SLD high. If you'd bought puts anywhere in this range, those puts would have experienced 250 basis points of downside. You don't keep them. You don't pile into more puts here and get greedy. You take profit and you reposition, which is what all the other bears did. And then we rallied, right? And then when we're done rallying, you can look for an opportunity to buy puts again. That's trading. It's opening and closing positions. You buy or sell high and buy or sell low, right? My problem is I rolled where I should have taken profits and waited, but I have June 19s, so I'm okay with that because I think we're about at the top. Yeah, and so then you can, if you have theta, you can use that time to average down. You can hedge, Like if you're going to go short down here, right? You can sell, shorter dated contracts. You can sell short puts as well, right? And you create like a spread, and then at the top you can close your short puts, and then you just have puts open, except they were free or mostly free, right? No, I wasn't fully focused on your initial question, Yaga. I was just pissed off at everyone. You just happen to be like the 30th person that asked me the odds of the market going down by a specific date. And the problem with that is we could go down the day after, like we could go down Monday, right? We could go right the back down to where we were by Monday at market open, right? And then, we could be down at like 3,900 by the fucking Fed meeting, and then we could bounce all the way back to 4,200 long before May 19th. And one of these days, we're bound to like walk out of something like this happy. I just don't know when it'll be. I mean, I know a lot of people made money on this drop, but it should have just been everyone, right? Like this whole period was just positioning for this downside, right? And then it's like every time it's like 40% of people that actually realize the downside, and then the rest get greedy and don't take profits or roll profits forward into even more downside. I mean, you don't increase risk when you're winning like that, right? You want to like it makes sense if you like pull back some puts, right? You take some profits and then leave some runners, and you lose on your runners, and like, okay, that sucks, right? But, like closing your whole position here and then doubling down here, that's terrible. I mean, there's entropy in a market too, right? Like you're not gonna have a continued move down that just lasts forever. Eventually, it's going to pull back.